I hate to say it, guys, Bitcoin really doesn't look very good to me right now at all. I will go over the good, the bad, and the ugly, but as it stands right now, guys, just looking at my 4 hour chart for Bitcoin, I've been warning about this for quite a while, and basically since we were trading up at these levels up here, that this is a warning sign that I take very serious on the MDX Trend Master, you guys. So those of you guys here with me right now live, you guys all have these indicators. The Trend Master, this is one thing that I really love using it for because it's right in the name, Trend Master. It's great at spotting a trend. However, for me personally, I don't take every signal as its own thing. Like this sell signal, for example, I mean, it happened really late, right? It happened way down here. Obviously, still a good entry overall, but I wouldn't take that signal all too serious on its own. But the fact that we got a lower one with a lower buy signal, that's just showing that the indicator is now actually trending to the downside. So I take that as a big warning. For several different reasons, right? And here's the thing, guys. I know a lot of people just use indicators for, I need to get into more entries, I need to be making more trades to be more profitable. But indicators, I use them equally as much, possibly even more so, as risk management. Like, I took a bunch more profits off of my long last night because we had this type of a signal on the 5 minute for Bitcoin. So I just figured that, hey, you know what? We're getting that reversal warning, whether or not it's going to play out. I'm going to at least take some profits off of my long because there's a warning sign there that things could be reversing. So that's something that I take very serious, but even more so, you guys, I mean, I look at market structure first, and after that, that's where I kind of look for those confluences. And right now, you guys, I have a very large concern about this market structure as a whole, and this is on the 4 hour right now, but let's just go something like this. Basically, since we ended up basically losing this structure here on our 4 hour swing to the upside, as we got into my swing fail pocket, I was warning literally the day before we got that big capitulation on live stream with you guys. The day before, I had mentioned that I think it was very possible Bitcoin drops to 107K. Now, I thought it would take a month, and I didn't think it would go to 101K. I didn't expect that to happen in the matter of a few hours, but the price action was there, and as well with the liquidations indicator, there was a bunch of liquidity down there. There was more before, but as it updates, some of it's disappeared, but basically came and grabbed a whole bunch of that, you guys. But that was all called just off basic market structure. I had no idea that Trump was going to tweet that they were, hammering China with tariffs or whatever was going on that day. I don't even remember. I'm pretty sure it was something tariff related. But for me, it was all about the fact that looking at this bearish Stuber, because we lost this high back, or this low back here, right? As far as this trend, we already had this setup, right? We had this high, higher high. We lost that higher low. Therefore, we end up coming back up towards resistance, and we have that swing fail pocket there. Just like we did back here, you guys. The thing is, everyone was saying how that move was unpredictable, and that nobody could have seen that coming other than insider traders. You guys, we literally had the exact same setup back here. The last time we tried breaking out of all-time highs, we did the exact same thing again. So you can't tell me that there was not some sort of a warning there. And the fact that we then ended up losing that structure, the immediate uptrend that we had on the 4 hour, hitting that macro resistance, losing that uptrend, and then absolutely nuking. The thing that I have great concerns with now, you guys, is so obviously we ended up losing this level, right? That would have been our, let's call that the low of the trend, right? The fact that we had this high and we had this higher high. This was the low, the lowest point between the two. We ended up losing that level, whether you want to count the wick or not. We closed bodies down here. Yeah, we reclaimed it and we get those bounces, but the structure was already broken. That was our warning sign on the trend. And so since we ended up losing that level, unfortunately, since that, you guys, we have now set another lower low, right? So we had this low, we set a lower low, and we have now set another lower low. So we actually have a fairly confident downtrend right now on the 4 hour. Whether we end up bouncing from here, it's still a downtrend. I don't care what anybody says. Yeah, if we reclaim this level, sure, we can we can end up going for a bounce. And we could, honestly, who knows, we could go to all-time highs, but that would mean that we're changing the trend again. As it stands right now, we have a low, we have a lower low. The highest point between the two is now our confirmed lower high of the trend. So basically right now, even if we get some sort of a bounce, and this is what I was saying before the stream, that I think it's possible we go up to about 112k, is if I take that lower high structure point and I pull one of my Stuber fibs. Now this is the same whether I'm trading the 4 hour, the weekly, the 1 hour, the 15 minute, the 5 minute, the 1 minute. I still treat structure the same. So I understand, guys, this month I've already taken 50 trades. I'm hitting a 74% hit rate so far this month. And that just goes to show that, you know, trading the same strategy and being able to trade that, something repeatable, that's how you're able to keep your emotions at bay and actually profit when, you know, times are crazy like this and everyone's saying manipulation this, manipulation that. Guys, it's very basic chart structure. It's just that people have started relying on Twitter and stuff like that and announcements to do their trading rather than just looking at the charts. And guys, I know not everybody wants to enter 50 trades in a week, okay? I know not everybody's trading the 5-minute chart, but the structure on the 4 hour is the same. The same way I would look at this. If, let's pretend these numbers are completely different on the side, let's not care about values, just how the structure itself is. This was our low, this is our lower low. Highest point between the two is now our confirmed lower high. Right, so we can assume, yeah, on this little trend, like even just this downswing here, yeah, we've obviously set smaller ranges inside that bigger range, but as far as the macro trend now goes, this is the range that I'm mostly interested in right now. Basically, let's just remove some of this just to clean things up a little bit, and basically I would be looking at resistance something like that starting at about 112.7k if we get some sort of a proper bounce. It's hard to say right now, we're looking so weak, but if we end up getting a bounce, I would expect us to basically start running into resistance, like I said, around 112.7k. But then there's also a potential swing fail, right? Just like I was talking about at the all-time highs, there is still a chance that we would come up here, get this liquidity grab, and then fail to hold that resistance as new support, basically, and end up shorting a retest, something like that. That is very possible. Now, here's the problem that I have with Bitcoin right now, and why I think that the bulls are a little too optimistic right now, is notice that, so just how big this range is, and this will change if we actually set another lower low. It would actually make me easier to get bullish again, which I'm going to explain in a little bit here, because just of how the structure would be forming then. But as it stands right now, just since this is such a large range, even the small range inside the bigger range, since it is so large like this, that even if we end up breaking out of this range, where is our next resistance? Well, then I'm going to pull from where the top of this range began to where the bottom currently is, because I'd be looking for the bigger swing. And then notice that we just have more resistance above us. So no matter what Bitcoin does right now, basically, it can go to the upside. And I am positioned in a long right now, but I'm not bullish. I just took a long at a buy level, and my stop loss is at break even, and I've been taking profits on the way, but I have 40% running as a moon bag in case we smash through all this resistance. But the fact that even if we get some sort of a bounce, there's nothing guaranteeing that we are going to go to all-time highs. And in fact, if we end up back at these resistance levels, whether the macro Stuber or the macro swing fail, you know that people are going to be screaming for crazy new bullish targets. Everybody is going to be FOMOing longs into resistance once again, just like they always do. We will see that FOMO kick in at those levels, and in my opinion, it's going to get punished again, and they're going to say that it's manipulation, that it was because of some tweet or some news announcement, some sort of fundamental, and in reality, it would just be the exact same setup a third time in a row. So I'm not saying that we're going to go up to those levels, and I'm not saying that we can't smash through them, but just understand that when we get to those levels, just be disciplined and respect resistance when we get there, because the last couple times when there was a lot of people getting wrecked by trying to FOMO into the breakout but not giving it any room to breathe, basically. I mean, Unfortunately, yeah, the 115 was not broken on either of those swings, and I feel like if we end up doing the same thing again, that would take us to approximately 130,000. And let's just see if it's possible. I mean, let's look at the liquidations indicator here just to show where there is a bunch of liquidity, and there is liquidity right up to those levels, right? Let's just remove my drawings and just look at the liquidations. This is everything from 10x to 100x. So a lot of liquidations up at this level because so many people have lost, faith and start trying to short late into the trend. But any kind of bounce, we're gonna see FOMO kick into the markets again, and you're just gonna see retail FOMO in at all the wrong times, as they always do. And this indicator, you guys, this retail long short indicator does such a good job of showing us exactly where retail FOMOs into the wrong positions, basically. This is one time where it does look like longs are increasing as we're trading into support. So that might be unfortunate and might end up giving us fuel for the fire to break through that support, because generally speaking, when retail starts longing, as their longs climb, the price generally goes down. And as they start to short, the price generally starts to go up. Just to show basically a couple examples, let's just say, up here, basically, this is basically right where retail started building their longs. And notice, as soon as they started climbing, that's where the price just began to drop. And as the retails really started trying to long the dip, and I was warning about this, you guys, retail was really trying to long that dip, and that's why I was thinking that, oh boy, this move is going to have legs, and it absolutely did. The whole time the bears have been in control, because we see retail just continuing to be willing to get wrecked, right? We just see retail still having FOMO because realistically, probably because of a lot of influencers on social media that are constantly bull posting, and it's really hard to ignore that, and especially when there is fundamentals that seem like they make sense. But when you really look at it, as soon as retail starts longing, that's just where you see that, unfortunately, they just start getting wrecked. And even right now, the fact that we see retail willing to long this dip again, I think that's just fuel to the fire. I think they're going to get punished, and I think we are, like I said, on the 4 hour, we have a very serious structure change on the 4 hour, and unfortunately, we have a nasty downtrend. Guys, even looking where our little pump today took us to, let's just look at this, you guys. Let's really microanalyze this. On this little uptrend that we had here, notice this is where the trend ended up breaking, right? Because we had this little... and this is very micro-analyzing, but the fact that we held this support here and blasted off higher, we have our higher high. As soon as we lost that level, notice what happened, right? We started trading to the downside. We end up setting this lower low, right? That confirms this as our pivot. From there, we set another lower low. This confirms, or sorry, actually, down here, that would confirm our lower high. Another lower low that confirms this as our lower high. We held that. Notice this bounce here. Everyone got excited into resistance again. From here, we set another lower low. Lower high barely moves on that kind of micro break. Lower low, lower high, lower low, lower high. And notice where we got rejected today. I know how much that looks like micro analyzing, but that's just goes to show how important it is to be able to recognize lower lows, which then confirm lower highs, right? If a lot of times, a lot of traders, that's the thing, is they assume that, hey, we're getting a pivot here, this must be our lower high, or this must be our higher low. But I'm really not confirming it until a downtrend is broken. For example, if this move here would have bounced a little bit higher and taken out this lower high on the trend, at that point, that's where basically I can assume that, hopefully we're going to get some sort of a higher low here, but it's not confirmed until we get this move, right? When we actually end up setting our new, so this basically broke the downtrend, and then if we get another higher high, that would then confirm this as our higher low. But until we get that higher high, we're just assuming, right? So yeah, we can still trade it. You know, that's how my Stuber fibs roll. Basically, I'm just assuming it's going to be a higher low based on structure, basically. But to actually point out the higher lows, I need those higher highs confirming that level, right? And then if the price does something like this, then hey, notice that we got another higher high, but then our higher low broke. At that point, I can start looking for those shorts to start trying to short some sort of a lower high, because since we broke the uptrend, that's where you start to look for the downtrend play, right? And that's where people start thinking, oh, we're going for the highs again, we must be bullish. But that's very likely just after a structure break, you're getting that retest of resistance, right? Same on the other end, obviously. You know, like I said, if you're breaking the bearish trend, then you're looking for those higher low retests, basically. So guys, it is very, very basic market structure, but so many people overlook that and don't truly understand it, I guess, or just try to look for other confluences and try and overcomplicate things. But guys, honestly, nothing, at least in my opinion, when it comes to actually trading, investing and trading are very different things, but when it comes to actually trading, there is nothing more important than being able to recognize higher highs, higher lows, lower highs. That very basic market structure goes so far, right? And that's, you know, even the fact that, okay, let's say we end up breaking this level, right? That would then break my micro downtrend, right? Here, let me make a proper line here. But if we end up breaking that level, at least we've broke the micro trend. But at that point, we still have our resistance up here, like I was talking about, because yeah, great, you know, we're breaking the micro range here. But as far as the actual resistance, and that's where it pays to, literally pays to zoom out once in a while when you notice this low and this lower low, the highest point between the two is way up here. So it's very possible that we end up trading all the way back up to those levels, grab some of those liquidations, the high leverage stuff in particular, right? Let's pull a fib from this level down to where we are, and notice that going towards the 115 would basically grab most of the high leverage stuff, right? All the bright yellow pockets there. That would basically grab all that high leverage stuff. So very possible. I don't want to rule it out. I don't want to get perma bearish in the sense that, hey, I think we have to go straight to the downside, right? Bounces are very common, and that's exactly why I said a typical Stuber setup. That's what I look for, right? The structure break followed by the pullback. And yeah, obviously breakouts happen. It's very possible this micro trend just continues and we don't even get that pullback. But it's very normal price action to break levels and then pull back. And that's what a lot of people have a hard time with. And that's why these fibs, these zones, basically the Stuber fib zones as well as the swing fail zone like that, so often they work as bull traps or bear traps, right? Much like I said, I ended up longing this guy here. I longed that 786 and rode this to the upside, hit a couple of my targets, right? That's the thing. That's why I love playing fibs and why they're so systematic, because you have your entry levels, your invalidation levels, your take profit levels. Like everything is mapped out for you, and it's very easy to set your emotions aside if you just set your orders and walk away, basically. As long as you've done back testing and you kind of know your probabilities, it's easy to, you know, get rid of those gut emotions, and why I'm able to kind of just trade the same setup over and over. But yeah, after that, even notice where we went from there. We went a little bit higher, and let's extend that, and we basically came right down to the 115. I do actually still have a long open on this, based on the 5 minutes Stuber here. I know I was pointing this one out. Let's just do this. This is where my fib was. And basically ended up taking a long based on that, because I have that bullish setup, right? We broke the downtrend on the 5 minute. We had this low. We had this lower low. That means this is my lower high on the trend. We ended up breaking that, right? At that point, I'm not FOMOing into the breakout. I'm looking for that pullback to long my fib pockets, basically, right? 786, 886, very close to a double bottom there, but still had wiggle room, right? Still had wiggle room to the downside. Could have went lower, could have caught a couple more entries. But that's where a lot of people were getting bearish and trying to short as well, right? People were trying to short on the retest because support always looks weak, just like resistance always looks strong, or looks like the price is strong, looks like the price is weak, obviously. But yeah, very basic market structure, you guys. And then using fibs, that is my go-to. What is the structure doing right now as far as the 5-minute goes? Technically, I think we got a little Stuber bounce here, but that would have already, yeah, that might have already played out, right? But same thing, right? We had this low, we had this lower low. This would be the highest point between the two. We end up breaking it, come back, get our retest of support, and we've even hit the first target. So even if the bears are in full control, at least the bulls were able to, as far as the scalp setup goes, it's already hit the first target. The second target would be the 214 fib up here. And then from there, if you were still in a position like that, then I like to let runners run, right? I always take profits in the range first, because always trade the range first. Whatever range pull that I have, like I said, those targets are already there. So always trade the range first, but I also like to let the runners run, because if you're just swinging at home runs, you're going to continue to get wrecked, right? I mean, so often the market loves chopping around sideways. I mean, these days is a perfect example that the market loves chopping around sideways more than trending in a single direction. And that's why it's so important to pay yourself inside the range, right? If this is the fib that I pulled, then I should be taking profits inside that range. Yeah, if a breakout happens, great. But if it doesn't, at least I'm protecting myself, right? What other ones can we look for here? Zcash is one, guys. Obviously, I've seen a lot of people in the altcoin chat as well talking about this one. It has been in a beautiful trend. I did take a short on it down here, and that was another one of those times, guys, where since I played the range first, it worked out just fine. But right here is where we lost some structure, right? We had a high, had our higher high. We end up losing this level, and then notice that we end up coming back up, hit the 886 perfectly, hit the first two targets, and from there the rest gets stopped out at break even. Whatever, you know what? It was a good trade. Whether it was a home run or not, it was a great trade. And at this point, looking at the trend for what it is still going to the upside. And the way I'm looking at it right now is basically, so this is a tricky one, because if you look for candle bodies, technically we even broke above this here. So you could look at this structure and that we need to hold that. I personally prefer wicks. So I'm looking at this as a high. This is a higher high. That means our higher low is here. So that's why I have my fib something like this. And notice actually even just below my swing fail pocket, we do have the MDX Trendmaster as well for potential support. So that's a very strong trend on Zcash. I'm only betting against that by having profits in mind on those shorts. It's not like if I take a short on something like this, I am not expecting it to go to zero. I'm not interested in guessing a top. I am interested in taking a trade setup that actually has entries, take profits, invalidations. Guys, if you're ever entering a position that does not have those things, if you enter a position, you should have at least a couple of take profits set, just in case those levels get hit and then it reverses. You should have your invalidation, hence your stop loss, and you have your entries, right? If you don't have that kind of a systematic setup, then you do not have an actual trade setup. If you're just guessing on a gut feeling and you have no idea where you're planning to take profits or anything like that, it's not exactly a proper trade setup, right? So that's something that we need to consider as well. And that's where backtesting comes in, right? Write out a set of rules, use this replay feature on Tradingview, and go back and test years of the trade setup that you have in mind that, hey, I noticed these things happen together. I want to see how they've played out over the last 4 years, so you can get a wide variety of all types of market conditions. And that way, when it comes time to actually trade that and someone tells you, well, yeah, this time's different because this thing is happening. This just got announced or whatever. You can go back and say, well, when I back tested this pattern and with these rules all met, I never went back and checked what the media was saying. I never went back and checked what social media was looking like. That's the thing with backtesting. It's just 100% charts. You're just playing your mathematical probabilities, no emotions attached. I would way rather open up a chart and know within 10 to 20 seconds if I'm interested in taking a position or not, rather than to look in detail into the global economy for hours at a time. I'm not interested in doing that because there's so many biases. You don't know what to believe. So much stuff is made up, and just how people are going to use that to their advantage when they're higher up, and with how the big players are going to use that. You just have no idea at the end of the day. And that's where charts is your best chance at early inside information. Yeah, like Nancy Pelosi. Yeah, so, and that's another thing, you guys. Again, investing and trading are two very different things. I only know one person in my life who trades very well on fundamentals, but he only does it on like a weekly time frame. He's not trading a 5-minute chart. He's not trading an hourly, a 4-hourly, even a daily chart. He's trading a weekly. So that's the thing. Fundamentals do matter, but if you're trying to trade a 5-minute chart based on fundamentals, good frickin' luck. And we've all been there. We've all tried to do it. That's the thing. The reason the mentors all say to, trade the charts is because we've all been there. Ethereum, guys, also looks like trash. The MDX Trendmaster on the 4-hour still printing lower sell signals. Even if we get a bounce now, Ethereum has the same thing as Bitcoin, right? You can see I have this mapped out already. We had this low, we have a lower low. That means the highest point between the two is our confirmed lower high. On top of that, we have those lower trending sell signals. So even if we get some sort of a bounce, just understand that starting around $4,000 we have a ton of resistance again. I would love to see altcoins absolutely blast off for the end of the cycle, like what typically happens, but we need the charts to show that, right? Everything is just suggesting that so many assets right now are just in free fall, basically. Not quite. We're getting those little hopium dead cat bounces, but nothing looks good. Solana technically in my Stuber fib right now, but again, lower trending sell signals, lower trending buy signals. We have resistance from the Trendmaster closing in on the price, so even a bounce, if we get some sort of a bounce, very likely that it's short-lived. Just Zcash is obviously the strongest trend out of most things recently. Aster, I have a bit of a long position on Aster, a 20x that I caught basically at the perfect lows down here. I don't even remember how much I have running. I don't have a large chunk. I think I have like 40% or something like that running on that position. I don't know why I have this blue dotted line here. I guess I accidentally just put that there. But yeah, same thing again, you guys, right? It's not so much that I was bullish on Aster at these levels. I had no reason to be bullish on it down there, other than the fact that I was just looking at the chart for what it is. I have a diagonal trending support line, right? Because basically this was my low, this was my lower low. So I just connected a diagonal line looking for a third touch point, basically. But on top of that, I also had this fib pull, right? I know diagonal lines, they love them or hate them. Diagonal trend lines, they're something that are argued about. I personally like them, but I like to see confluence with them. I like to see how they're reacted with. The fact that we basically got a swing fail on that diagonal trend line, which also lined up with the swing fail of this Fibonacci pull, right? Pulled from this low here to this high here, basically, because we broke this micro trend, basically. If we were looking at the micro trend on this, we could have said low, lower, high. Either way, nice pump, broke some structure, and getting that pullback. So just kind of, yeah, it was a nice swing fail on a couple different levels. So just playing support for what it is. Again, I have no emotional attachment to that project. I really don't care if it goes to zero, but when I see those kinds of opportunities, just the risk reward alone is just so big that it's hard to pass up, right? I'd always rather be a buyer at support and a seller at resistance rather than the other way, right? I was seeing so many people on social media giving up on Aster as we were trading down to these levels, saying that they're selling everything. That's exactly where I was starting to go long, because it was support, right? People always think support looks weak, especially if you drop below support very slightly. Those dreaded swing fails, but they are so beautiful when looking for those tight risk reward setups. They're so beautiful when you know how to play them. But yeah, that's where the average person just gets wrecked on that kind of a thing. So many people were selling out of their positions right at the bottom, right at support. See it time and time again. Yeah, Bitcoin's still looking weak. Like I said, we got that little bounce out of the 886, but the fact that we're already kind of losing momentum, what is the trend master looking like? So yeah, we still have resistance with the trend master, and like I was warning about last night, guys, in the Bitcoin chat, when we got that lower sell signal, I warned that that was a big warning sign for me, and that's a perfect reason right there. Especially when you get then a lower buy signal and another lower sell signal, that's just confirming a trend at that point. Beautiful move to the downside and basically right to the Stuber fib pocket again, right? We're getting very close to the 786. We haven't quite got down there yet, so I think we could still push lower. And this is where I have mixed feelings about Bitcoin right now, honestly. All the longer time frames, the 4 hour, the weekly, I haven't even talked about the weekly yet, have I? The 4 hour, basically, people always say, when in doubt, zoom out. Unfortunately, in a time like this, when I zoom out further, I get more and more bearish. Like the 5 minute here, sure, you know, there's potential support. Hey, we have this support here that we tested. We even have some support levels a little bit below us. But then we zoom out to the 4 hour and we just have this disgusting trend. Even on the lower trend here, we respected the lower high on that micro trend. Bring up the trend master. Like I said at the beginning of stream, we have lower trending buy and sell signals on the 4 hour. And then we zoom out to the weekly, you guys. This diagonal trend line, now this is a logarithmic chart, so it might look a little bit different if you're on a regular chart. The support would be a little bit lower yet, I believe. But just looking at this, this is a very valid diagonal trend line for me. I have very specific rules with trend lines. They need at least 3 exact touch points. This is a very clean trend line here. Actually got a 4th one there too. And so the fact that right now there is a few days left. There's 3 days left until this weekly candle close. So Sunday's going to be interesting. But this trend line goes back a year and a half, basically, you guys. There is a lot of data here. That's a very important trend line. The fact that we are losing not only that diagonal trend line here, but the fact that it overlaps with support of the weekly range, the micro range, right? The fact if we wanted to go just by candle bodies, we had our higher high. This would have been our higher low. So we're losing that. Even if we wanted to go with wicks, we have this high and these ones are slightly higher. And again, we still have that same higher low. So the fact that we're losing that trend on the weekly as well as the diagonal trend, and that's after losing this order block and flipping it into resistance for 3 full weeks, this being week 4, you know, there's a lot of red flags on this weekly chart right now. And this is one of those things that even if we see a bounce, we are likely going to, I don't know if I should say likely, but in my opinion, I would not be surprised to see us flip that old support into new resistance. Right, watch for that support resist flip, because that could be a nasty one, and that will catch a lot of people off guard, because as soon as we start bouncing, people are going to say, oh hey, we're finding support off this level back here, that was the final shakeout, we're going to 500,000 now, whatever. Don't get me wrong, they're correct, we are at potential support, but there's still a lot of red flags, and to confirm that any sort of bounce off this level is a confirmed moonshot to new all-time highs is laughable, just because of all the resistance levels I was pointing out on the 4 hour and such. It would be so premature to say that this is the final shakeout at this point. When you look at this weekly for what it is here, when we look at this and the fact that this is a 1.5 year long trend line and we haven't even closed the first candle below it yet, you really think that move is over completely? I don't know. I have my doubts. I have great concern about this type of market structure, and not only the market structure itself, but from a timing analysis point of view. I understand the 4-year cycle could be broken, you guys. Absolutely, it could be. But generally speaking, the last 2 market cycles, they basically topped out after 152 weeks. We basically broke a bunch of nasty weekly structure at 152 weeks. Sure, we can invalidate that. We can start staircasing higher again. I would love to. That would be so good for my spot bags. But looking at it from a realistic point of view, generally speaking, we trend up for that amount of time, and then we start breaking macro resistance. We end up coming back down to this liquidations band indicator. And right now, this would obviously climb and it would keep catching up to the price a little bit. But this is down around $40,000 right now, you guys. Now, I'm not saying that we're going down to 40,000. Please don't get the idea I'm saying that we have to do that. But let's just say a bear market is starting right now. Like I said, I treat all time frames the same, and market structure is market structure. If we look at the full market cycle for what it is and look at where a Stuber fib pullback could come back down to, we're looking at around 40,000 US dollars, you guys. That's if it's a bear market. That is such a big if at a time like this. But before you judge me on this, let's look at the previous market cycles. Bull market bottom, bear market peak, bear market bottom, bull market peak here. And notice where we ended up finding our the bottom, and where we started our next bull market was right around the 786 there. Let's go to and also that liquidation band indicator. Go back to the cycle before that. Cycle low, cycle high. Break some structure after 152 weeks. We end up, coming right back down to the very middle of the pocket, right between the 786 and the 886 there, and basically to that liquidation band indicator. It actually took until COVID. COVID is where we actually ended up testing it, but we got very close to it there, and we did get our Stuber fib there. Market cycle before that, from all-time lows to where our first cycle ended. Notice where our bear market took us to, the very middle of that pocket again, the 786, 886 fib pocket, tested the liquidations band there, right? Every market cycle so far has done that. And I don't want to say that, fractals need to play out the exact same every time. It's very possible that it gets broken. Trends break all the time. But so far, the trend is your friend until the end. And we have a lot of red flags suggesting that we could see... There's a lot of red flags basically suggesting that we have barely seen anything yet. And that terrifies me, because the mental health of most people in this market right now is... It's terrifying how emotional people are about this cycle already. And we are just starting a pullback. So many people, that's why retail's still longing. They think that, hey, I got wrecked, therefore the bottom must be getting close. It has to be close. We do not have to be close. And anybody who has been here for more than a cycle, and it's no fault of your own. If it's your first cycle, it's a learning experience. But those of us who have been through full cycles before know that it can get a hell of a lot worse than what we've seen so far. The altcoin liquidation event, that was something that was pretty wild. But the whole altcoin economy in general is so different this cycle. Everyone wanted it to be different. Well, you got what you wanted. It just got completely destroyed. It got diluted as shit. There's literally tens of millions of different altcoins out there now. So altcoins are a dangerous game no matter how you look at it. There's less volume in the order books, there's less liquidity there. They're just higher risk, and especially if you're using cross leverage, it gets very dangerous. But in general, yeah, they got hammered. But when we look at Bitcoin, like a lot of people were comparing that event to when we got our COVID crash. But like I just mentioned, our COVID crash tested the liquidation band, literally a liquidation event. What we had on this little sell-off the other day or the other week, we didn't come close to a liquidation event on Bitcoin. Not even close. So, yeah, don't get me wrong. I would love to go parabolic. I would love to be a moon boy. But looking at it realistically right now, I care more about, trading properly and protecting myself than I care about feeling warm and fuzzy and being told my lottery ticket is going to work out. Just catching up on the chat a little bit, you guys. I know how I like to get ranting about things when I get bearish, so I'm way behind on the chat. Let me know in the chat how you guys are all doing. I really hope, I might make light of the bearish scenario sometimes. It is really fun when you are profiting on the way down. There's a special feeling to it, but I do understand, don't get me wrong, my spot bags, the spot bags that I hold, are getting wrecked just like a lot of people out there. But the trading account, loving the volatility, because as an actual trader, I really don't care which way we go. All I care is that the market's volatile, and the fact that it's so volatile both directions has just been a blast and a blessing. Not a holy man, but it's a blessing. Let me know if you guys are in any interesting trades, any interesting altcoin trades. Philbag is pumping. This guy. Yeah, it's definitely had a good 8 hours or so, hey? 40% pump. Yeah, that's nice. And I like that it actually broke out of this little range here. One problem I have with this chart, honestly, on the 4 hour, is that a lower high was not broken because of how the structure formed. Because, again, I'm a wick guy. After this wick, there has been no lower low. So this was never a lower high for me. So from that low, our previous low would have been here. So looking for the actual trend would be something like this. And it's starting to get very close to resistance. So just something to keep on your radar. Not saying it can't blast through it. With FOMO, maybe it ends up doing very well here. But just know that we are getting close to resistance. Oh, it's not a new trade. It's more of a spot bag, right? Yeah, Jelly, that one's been crushing it. No idea what it is or anything. I assume it's something dumb, and that's why it's pumping. Last flush before the pump on alts. Yeah, I don't know. I don't know if there's going to be a final pump on alts. I hope there is. For example, my troll coin. But again, whatever. I keep DCAing into like troll, for example. As far as a meme coin, whatever. That's my baby. As far as degenerate meme coins. And I've been in since like 1 cent, but I've been DCAing whenever I see these big support levels or whatever. But the thing is, guys, is I'm really just buying it with some profits that I'm taking from trading Bitcoin, mostly shorting recently, and throwing some of those profits into it. So I really don't care. I mean, if we end up going into a full bear market, I'll buy more of it anyways. So it really depends on your stance, right? As far as from an investment point of view, yeah, you know what? If my bags end up getting hammered from here, so be it. Hopefully do a little coin collecting on the way down, and then hopefully time the lows, or even close to the lows, start buying in when the bear market is near its lows or whatever, and build bags again if that's what happens. If we end up mooning to the upside, then the bags will be happy. But as far as trading, as long as it's volatile, I'm happy. um but yeah, guys, basically I think I went over all I needed to. Again, just if I can give you any sort of advice from today's video, it would be really do back testing. If you're actually serious about trading, take the time, do your homework, use this replay feature, and really go back and try to master very basic analysis. Like I said, really having a good understanding of higher highs and higher lows and lower highs will go so much further than pretty much anything else you can think of. So rather than hurting your brain by trying to overcomplicate things and trying to come up with so many confluences out there, really just get a very strong footing for the very basic first. Because like I was talking about with lower lows confirming lower highs and higher highs confirming higher lows, you know, that type of structure can go a long ways. At least at that point you can, when you start looking for those pullbacks, at least you recognize that you have a trend on your side. So even if the trade doesn't work out, at least you're trying to play that momentum and you have a little follow through with your position. You're also more likely to catch those trending positions in that case, right? I still play the range first, but you're more likely to catch that run-in position if you're playing the trend based on which way the structure is forming, right? And I mean, Zcash is a perfect example here, right? As it just sets higher highs. Here, for example, I mean, let's just erase everything here. But let's just look at a perfect example right here. Here we had our high. We obviously set our higher high. Let's just look at that very basic market structure. This would be the lowest point between the two. Pull a fib to look for a retest and look at that. Would you just look at it? You see that type of structure so often. And yeah, if you wait for those pullbacks, sometimes you're not going to catch those positions. But I would always rather take a position that has a much tighter invalidation, because I mean, if you were just one of those people who, hey, we set a higher high, time to long right now. Although, yes, this is a bullish signal. A bullish signal doesn't necessarily mean long right now. It means look for long positions, right? Start favoring the long side. So whether that means laddering in just down towards your invalidation, or if you're like me and you have a Fibonacci strategy, or you have something with an indicator, some sort of confluence, whatever, right? But that type of market structure, a lot of people would say that, oh, this sell-off, oh, I got wrecked here, that was manipulation. No, that was just market structure doing structure things. How much time, effort did I spend on backtesting my strategy? Well, my strategy is an ongoing experiment, and it's just the initial backtesting. I did a lot. I can't remember. I ended up, I can't remember exactly what the numbers were. I'd have to go dig up that piece of paper where I took my notes. But I know it was between, I think it was over 75%, something like that. But I used to go back, like when I go back and back test new strategies, basically, like I will basically, it's go back a full cycle at least. So generally I'll go back on like a 4 hour, let's say, and back test a strategy for about 4 years worth of charts, just to come up with a broad basket of examples in all sorts of market conditions across all parts of the cycle, just so that you get. But yeah, like so many people out there would way rather lose $10,000 trading than they would just put 10 hours of homework in. Yeah, it's ongoing, really. Where once you have a strategy, then sometimes you fine tune it and you're just able to catch it on the go, kind of a thing. But yeah, any type of a new strategy, I always go back, like I said, at least a cycle. And that's the thing, the market is always changing. So that's the thing, if all of a sudden it's like, hey, I backtested this strategy and I had a 70% hit rate, and all of a sudden I'm, only winning 30% of them, what's going on? And then you might need to backtest and start adjusting things, right? For example, I used to often trade the 618 and the 786, but I found that often when those levels were hitting, often candle bodies were hitting the 786 and the wicks were hitting the 886, so I was able to fine tune that a little bit, right? Sometimes you just notice things. Or then also, like using the trend master, for example, right? How I'll pull Fibonacci's from the trending signals quite often. If this is where we reversed for our last lower sell signal, pull a fib, something like that. The Algo Master currently showing a bullish one, but it was actually invalidated down there. Anyways, my friends, I think that's about all I wanted to go over today. Thank you for being here with me, guys. I hope you enjoyed it. For those of you who aren't aware yet, and those of you guys who enjoy how I look at market structure, how I look at Fibonacci's, how I look at the MDX ALGO indicators, do yourselves a favor, subscribe to the Crypto Trading channel, my channel where I do pretty much daily updates there, a lot shorter and more to the point than videos like today. That's more so like 20-minute updates every day, kind of a thing. And again, just looking at charts for what they are, not getting too involved with fundamentals or anything like that, just straight up trading anything crypto with charts, basically. So if that does interest you, go subscribe there. I will actually put a link in the chat here for anyone who needs it. Aside from that, thank you so much for being here with me once again, my friends. Stay safe out there. Peace.